The S&P 500 daily cloud chart, looking back to the correction wave from 2023, and we're starting a new one in the current era. I will zoom into the current area now. So the D wave, up wave A, and D wave, down wave B have 2 more days to make it above this high where the A5 printed, to have them shift over. If not, then we're going to be dealing with the B wave printing below this high here on one of these bars high here. If it keeps going on any longer than after a couple of days, and if it can pull it off and have it shift over, the D wave down wave will print the D wave down wave C up here, and then D wave will be on the D wave up wave 5 and D wave down wave C. And that's the wave that went on seemingly forever, starting in November of 2019, believe it or not, and then just kept climbing all the way to the January 2022 top, where it just couldn't shift anymore. I think there was at least 15 shifts. So that's the best case scenario. Worst case scenario is it does not shift and we get the correction wave for D wave up wave A, B, C. The D wave down wave C prints, and then prints A1, and we'll go from there, but it will definitely be in correction mode if it can't shift. And zigzag gave us the swing point to the downside on this bar here. This high, 47.21.46, just could not heave itself higher than 47.26.78 from January 4th. So the swing point was printed here to the downside. Now we're going to look for the swing point to the upside, either by ATR4 or 5 consecutive higher lows. And the disqualified 50% and 100% momentum down is in danger of becoming qualified if price closes end of day Monday under 4667.48. And that goes for the trend factor down 1, also close under that level, qualifies it. And if you've shorted the S&P 500, and for that matter Q-Tech, if the S&P 500 ticks higher than 4729.29, then get ready to cover those shorts. And if it really makes a big move on Monday to the upside, which I somewhat doubt, then just jettison it early. If not, give it a little bit of leeway. If it creeps up there again and struggles to get above that high right here, and let it float a little bit above it, see if it gets above the Ichimoku cloud conversion line at that level, 47.37.71. So not even 10 points above this high, so it's worth it. Hang on, see if it makes it above the conversion line for a close end of day Monday, and then jettison it and get under these trend factor and momentum levels. Here's the 50% disqualified for now, exhaustion down, and the 100% disqualified, exhaustion down at that level. And the QQE has really let some air out of the tire, which is actually a good thing, even though the fast is below the slow, and That's not that far away from overbought again, so as long as it stays above 50 as an equilibrium line, it's in good shape of turning around and heading back up for another crossover above the slow. And as a reminder, haven't discussed this for a year or so, if you don't have all these indicators and looking at all these complicated things, there's one simple indicator that will tell you everything that we've just been looking at, and that's the 21 EMA in dashed blue and the solid blue 20 simple moving average, where the 21 EMA went under the 20 simple moving average right here on the 2nd, and then on the 29th it was still above it a little bit, but it was skirting with disaster here by flirting with going under. So that's the first one of the big three, the 20, 50, and 200. So all the EMAs were above their simple moving averages, and the 21 is now going under the 20. It's an ominous sign, but it is an EMA, so it can quickly rectify itself and get back above it again. And the Stark Band upper band has a downwards trajectory, and the lower one certainly has a strong downwards trajectory as price is pushing the envelope back down a little bit here. And the channel 3 low is following it closely, and the baseline is still at 4665.27, so still pretty good support. And the Bollinger Bands, upper band and lower band, are forming a squeeze. It's in the very early stages, but once they get closer together, this is still really far apart here, the lower band and the upper band, but it definitely had a breakout to the upside, so it's a good indication of when price breaks out, which way the trend will be heading. In this case it was up. It needs to get a lot closer than this though. And in this S&P 500 daily chart with the DMI and ATM trigger, you can see that the ADX has a slight downwards trajectory, but not until it goes under 20 will I be concerned that the direction has truly changed to the downside, so we have to give it the benefit of the doubt till then. And the DMI plus and minus are quite close together. Wouldn't that be a great thing to see the DMI plus bounce off of the minus and head back up, and the DMI negative head back down? That would be really incredible. The ATM slow trigger did go below the overbought line at 75. It's at 7106. So that's tough to change directions real quick there. It just doesn't happen, but this could change directions real quick. The ATM fast is definitely well below the oversold 25 and could be poised for a breakout back above it, and then push the slow trigger back up above the overbought line. And the indication is there because the long-term overbought P alert down has printed and been present for at least 4 days. And what that means, even though the mark has taken away the indication that this ATM pressure 102 is down, they've taken that indication away, so we'll just have to remember, think contrarian, that this is down, and down means that price is going to stay up. So if this stays like this with this overbought P alert down, then this is going to be a shallow pullback, so stay nimble on covering those shorts and adding and buying new longs soon. And the S&P 500 weekly chart, looking back to the COVID crash, I'll zoom into this current area now. This relative retracement disqualified up magnet from October 2022 could become qualified with a close end of day Friday for this coming week higher than this close from the week of the 31st. And this line segment, which is a qualified cancel line extension from back here, could prove to be resistance slightly. Once it becomes spent like this, it went back above it, back down. It's hard to call that resistance, but it's definitely a decent reference point, and that point is at 4738.36 for this coming week. So this line is a little bit off, and the official level is 4738.36.